Let's talk a little bit about foreign capital gains, both short-term and long-term. How do those work for expats?
Short-term capital gains are from assets that you own, normally investment assets like stocks or maybe real estate or even your own home that you own for 1 year or less. And with short-term rates, you don't get any preferential tax treatment on those. That's called ordinary income, and those are taxed at anywhere between 10 to 37% currently. Now, if you have one of these assets that you sell that you own for a year and 1 day or more, they're considered long-term capital gains. Long-term capital gains are taxed at either 0%, 15%, or maximum 20%. And the tax brackets are much broader for long-term capital gains rates as compared to the ordinary rates. So as an expat, there are a couple of additional considerations. So one is the foreign exchange rates that you have to use. Right? So they could turn a capital loss, for example, into a capital gain, or vice versa. They could turn a profit into a loss or a loss into a profit, depending on the differences in exchange rates when you bought the asset and then when you sold the asset. So yeah, that can have quite a significant impact, the exchange rates. The other issue too is that whenever you sell these assets, and you're an expat, you're living outside, and you pay tax to a foreign government, well then you can use the tax that you paid to the foreign government on these through the use of what's called a foreign tax credit on Form 1116, Form 1040, to help reduce any U.S. tax that you owe. So it's, in the easiest sense, it's sort of a dollar for dollar reduction.
So with the capital gains and having investments overseas and keeping track of all that, how important is it to keep good records?
Oh, it's critical. When you file your tax returns, you self-report a lot of the information that's on there. And one of the requirements that you have is to keep that documentation for at least 3 or 4 years, maybe longer, after you, for example, sell that asset and you have a profit that you report on a U.S. income tax return. You got to keep all that documentation. You have to give it to us so we can retain it. We can help prepare your tax returns. We can help you, strategize and plan going forward. Yeah, it's never fun, to keep stacks of information and all that kind of stuff, but it is critical.